Two people can walk into the same bank, use the same building, see the same logo, talk to the same employees, but they can walk out having experienced two completely different worlds. One person checks their account and sees a warning: insufficient funds. A payment gets declined, a fee appears, and suddenly being short on money becomes even more expensive. Another person walks through a different entrance. They have a private banker waiting. Their calls are answered immediately. Fees disappear before they even ask. They receive opportunities that never appear on a normal banking app. Same bank, different reality. And most people never realize this. Banks don't treat every customer the same way. Not because they are randomly choosing favorites, but because the entire system is built around one question: how valuable is this relationship to the bank? Your balance, your income, your investments, and your financial behavior all influence the experience you receive. Today, we're going through the 8 levels of banking, from the customers who experience the most friction to the people who have an entire financial team working around them. And by the end, you'll understand something important. Getting wealthy isn't just about having more money. It's about reaching a point where the system that once worked against you starts working in your favor. Level 1 is where millions of people find themselves at some point in life. The survival zone. This is when your bank account isn't a tool for building wealth. It's simply a place where money enters and disappears. Imagine this: you get paid on Friday. You already have plans for that money: rent, food, transportation, bills. But then something unexpected happens. A small expense appears. Maybe your account falls lower than expected. A payment goes through before you realize it, and suddenly, your balance drops below zero. Now here's where the system feels backwards. The person with the least financial flexibility often experiences the highest penalties. An overdraft happens, a fee appears, another payment comes through, another fee. The problem isn't just the money leaving your account. The bigger problem is that these moments make it harder to recover. When you're already financially stretched, even small setbacks can create bigger problems, and this creates what many people describe as a poverty trap. Not because someone isn't working hard, and not because they don't care about their finances, but because having no financial cushion makes every mistake more expensive. At this level, the bank relationship is mostly transactional. The system isn't asking, how can we help this person build wealth? The question is more basic: how do we manage this account? And that difference matters, because the moment your financial situation improves, the entire experience begins to change. Now you move up one level. You're no longer constantly overdrawing your account. You have money coming in. You're paying your bills. But something interesting happens. Nothing really changes. You are stable, but invisible. This is the level where many middle-class customers spend years. You aren't considered a problem customer, but you also aren't considered a valuable one. Now, the bank provides the basic services: a checking account, a debit card, a standard savings account. But there is little personal attention. You might wait on hold. You might deal with automated systems. You might receive offers that benefit the bank more than they benefit you. Because from the bank's perspective, your relationship hasn't become significant yet. You have money, but not enough money to change the conversation. And this is where many people misunderstand wealth. They think the biggest advantage wealthy people have is simply buying expensive things. But one of the biggest advantages is actually avoiding unnecessary costs. Better rates, lower fees, more options, more flexibility. The wealthy don't just have more money, they often pay less to use the same financial system. And that saved money has something powerful attached to it: time. Because every dollar you stop losing is a dollar that can start working for you. But then something changes. A consistent income, a growing investment account, a better credit history. Suddenly, the bank starts paying attention. Something begins to change. You may not notice it immediately. There's no announcement, no special invitation, no banker calling to congratulate you. But behind the scenes, the way the system views you starts changing. Why? Because your financial behavior has changed. Your paycheck arrives consistently. Your account balance is more stable. You are paying bills on time. Your credit history is improving. From the bank's perspective, you are no longer just someone storing money, and you have become a predictable financial relationship. And predictability is extremely valuable. Because banks are built around managing risk. The question is no longer, will this customer cost us money? The question becomes, how can we make more opportunities available to this customer? Suddenly, things begin appearing. Credit card offers, loan opportunities, higher account limits, investment products. The doors that felt closed before slowly start opening. But here's where people need to understand something important. Banks are businesses. They are not rewarding you simply because they like you. They are responding because your financial profile has become more valuable. Your stability creates opportunity. And this is one of the first major differences between struggling financially and building wealth. When you're struggling, most financial decisions are about survival. When you're stable, decisions become about optimization. You stop asking, how do I get through this month? And you start asking, how do I make this money grow? That shift changes everything, because wealth usually isn't built from one massive decision. It's built when your financial environment gives you room to make better decisions repeatedly. Level 4 is where boring starts becoming powerful. There is no dramatic moment, no overnight transformation. This level is built through something most people underestimate. Consistency. You have emergency savings. You manage your debt. You invest regularly. You avoid unnecessary financial mistakes. And slowly, the system starts becoming cheaper for you. Think about that. A person with poor credit and unstable finances may pay thousands more over their lifetime. Higher interest rates, higher borrowing costs, more penalties, more expensive financial products. But someone with strong financial habits can access better terms, a lower mortgage rate, better loan options, more favorable opportunities. The difference between these two people isn't always income. Sometimes it's the cost of participating in the financial system. And this is one of the biggest secrets of wealth building. Rich people often don't just make more money, they lose less money. Every dollar saved from unnecessary interest, fees, and poor decisions becomes capital. And capital creates choices. Choices create opportunities. Opportunities create more wealth. This is why financial discipline can look boring from the outside. There is no flashy moment. No one sees the person automatically investing every month. No one sees the person avoiding unnecessary debt. But years later, the results become impossible to ignore. Because wealth is often built quietly, before it becomes visible. Now we enter a completely different experience. Level 5, the preferred customer. At this stage, you may have significant savings, investments, or assets with the institution. You are still technically a regular customer, but you are no longer treated like everyone else. The difference is simple. Your relationship has become important. Maybe you need help with a large transfer. Maybe there is an issue with your account. Maybe you need financing for an opportunity. Instead of entering the general customer queue, you have access to dedicated support. The waiting time decreases, the process becomes smoother, the conversations become more personal. And this reveals something about every industry, not just banking. Resources create access. When someone becomes more valuable to a company, the company invests more resources into keeping that person satisfied. At this stage, the bank isn't just managing your account. They are trying to maintain a relationship, because losing you now actually matters. But the next levels are where things become dramatically different, because eventually, you stop being treated like someone buying financial products, and you start being treated like someone who needs a financial strategy. Level 6 is where the experience starts moving away from traditional banking. This is where wealth changes the relationship. The average customer usually walks into a bank with a problem. They need a loan. They need help with an account. They need information. But at higher levels, the conversation changes. The question becomes, what are you trying to accomplish? The focus shifts from individual transactions to long-term planning. A wealthy client may have different specialists helping them think about investment decisions, tax strategies, estate planning, risk management, asset protection. The bank is no longer simply responding to requests. It is helping coordinate a financial life. And this is a major psychological difference. Most people interact with money reactively. Something happens, then they respond. Wealthy individuals often operate proactively. They plan before problems appear. They structure their finances before opportunities arrive. And that creates an advantage. Because the best financial decisions are usually made before there is pressure. Level 7 is where most people begin to realize something uncomfortable. The wealthy don't simply have more money. They often have access to an entirely different financial environment. At this stage, banking becomes less about products and more about relationships. You are no longer searching for solutions. Solutions are being brought to you. Instead of calling a general customer service number and explaining your situation to someone new every time, you have people who understand your financial picture. They know your goals, they understand your priorities, they know the bigger strategy behind your decisions. And that changes the entire experience, because when you have substantial resources, financial problems are often handled before they become emergencies. A regular customer might ask, "Can I qualify for this?" A high-value client may ask, "How should we structure this?" That difference is enormous. One person is trying to gain access, the other is trying to optimize. And this is one of the biggest lessons about wealth. Money does not only buy things, it buys flexibility. It buys time. It buys options. And options are one of the most valuable assets anyone can have. Because when you have options, you don't have to accept the first opportunity. You can wait for the right one. You can negotiate. You can walk away. That is a type of financial power most people never experience. But there is still one final level. The level where the relationship between a bank and a customer completely changes. Level 8. Private banking. This is where banking becomes less like a service and more like a partnership. At this level, the customer is not simply using a bank. The bank is actively trying to maintain the relationship. The experience becomes highly personalized. Financial decisions are discussed in detail. Complex situations are handled with specialized expertise. The focus is no longer, "Here are our available products." The focus becomes, "What is the best strategy for your situation?" This is the world where customized solutions replace standard options, where relationships replace transactions, where access becomes one of the biggest advantages. And this creates a fascinating contrast. Like the person with the least money often receives the most automated experience. They interact with machines, forms, policies, standard procedures. But the person with significant wealth often receives the opposite. More attention, more flexibility, more human interaction. The same financial institution can feel completely different depending on where you stand. And that is the real lesson behind the 8 levels of banking. It isn't just about banks. It's about understanding how systems work. Most systems in life operate around value. The more value you bring, the more attention you receive. The challenge is learning how to move yourself into a position where those systems begin helping you, instead of limiting you. Now, this doesn't mean the system is perfect. And it doesn't mean every wealthy person receives special treatment simply because they have money. Financial institutions still have rules, risks, and regulations, but the difference in experience is real. Your financial position changes the opportunities available to you. The goal isn't to chase money just to impress others. The goal is to build enough financial strength that your choices expand. Because the ultimate benefit of wealth isn't luxury, it's freedom. Freedom to make decisions without constant pressure. Freedom to take opportunities when they appear. Freedom to build a future based on strategy instead of survival. So the question is not, what level are you at today? The better question is, what level are you building toward? Because every person who reaches the highest levels of financial freedom starts somewhere. The difference is whether they understand the system and whether they intentionally move through it. If you had to guess, what level of banking are you currently experiencing? And what level are you trying to reach? Let me know in the comments.